Hello everybody. Reserve Bank of India has increased repo rate by 25 basis points. Well, this is technical news, but it's important for you to understand this news because it directly implies an increase in student loans, home loans, and potentially an upward improvement for your total amount of earnings from fixed deposits. In this video, we are going to analyze what repo rates actually mean in very simple terms and also how it is going to impact your loans and fixed deposits. So let's get started with the video by understanding what repo rate actually means. Let's take for example a bank HDFC which is giving out loans to 5 different individuals and the loan amount is 20 rupees each. And after giving these 20 rupees loans for 5 people, it now needs to collect back 100 rupees with potential and interest rate of 10%. So the total collection would be 110. First of all, you need to understand that HDFC is not printing money. It is taking money from somebody else and then it is giving out these loans. So when it is taking money, it also needs to pay them certain interest. For example, if it is you and me, we give that money to HDFC, let's say 50 rupees, it needs to give us some interest, let's say 6%. And it is taking from some other party another 6% at the 6% interest rate. So for a total of 100 rupees money that it is taking from others, it is paying 106 rupees, and this difference between 106 and 110, the 4 rupees is what HDFC is making. So it is always trying to increase this 4 rupees. Now, one of the parties from which it can borrow money is from you and me, and the other party is potentially the Reserve Bank of India. And the rate of interest which Reserve Bank of India charges HDFC is called as repo rate. Now, this 6% has been increasing consistently over the last 1 year. It was initially 4% at the start of 2022 and now the RBI is charging 6.5% as interest rate. Last month it was 6.25% interest rate and now it increased by another 0.25%, or they call it as 25 basis points. So this increase in the repo rate means that now HDFC has to pay more to borrow money, right? And if it is paying more to borrow money, it still wants to earn this 4 rupees. So it will have to charge more as well on interest. And that is why all the interest subsequently, let's say on home loan or on student loans, all these loans will continue to increase. The EMI, the monthly installments that we pay to these banks, that will increase because the repo rate is increasing. Now the other point is, hey, the bank can borrow money from RBI or the bank can also borrow money from you and me. That is the second party. Now what happens is, if the bank is giving out money to HDFC at 6%, 7% interest rate, and if it is only giving me 2%, what will I do? Some other bank will say, hey, Pavan is getting paid only 2% interest, I'll pay him 2.5% interest and I'm still anyways getting that money for free compared to what I have to pay for RBI, right? So what every bank will keep fighting for Pavan's deposit, and subsequently the deposit interest rate on fixed deposit will also continue to increase. Now let's move into the second chapter and understand what does it mean to you and me. Let's take a simple example for fixed deposit and see what can happen. My dad has 10 lakh rupees as fixed deposit, and last year he was earning 6.5% interest for a 5-year fixed deposit tenure. Well, he is a senior citizen, so it is little more interest money compared to general citizens. Now this 10 lakhs 6.5% interest income, that also increased in the last 1 year, and now ICICI, HDFC, all these banks are offering 7.5% interest for senior citizens for a 5-year tenure. And on top of that, Axis Bank is giving out 7.75%, and HDFC in some special scenarios is offering up to again 7.75. So on overall the differential increase, the increase in interest rates is approximately 1.25% per year. Now what does that mean? If it's a 10 lakh deposit, you are earning 1.25% more every single year, which is roughly 12,500 rupees, right? So if it's a 5-year deposit, you are roughly earning 62,500 rupees as additional income because of the increase in fixed deposit interest rate. Now the point is, hey, my dad has already invested that money last year in a fixed deposit. Now what can he do about this? Because the interest rates have increased, 1.25% is a lot of money, as we can see 60,000 rupees. He can potentially go down, break the existing fixed deposit and reinvest in another fixed deposit. Now the only issue is, if he is doing that, he needs to pay two kinds of fees. The first one is penalty. Now how much is the penalty? The penalty is 1% on this 10 lakh. Whatever amount you invest, it's 1% of that amount. So roughly 10,000 rupees is the penalty amount. That is number one. Now the second fine that he also has to pay is, the bank will say, hey, I was about to give you 6.5% interest income, the original agreement, because you said you will keep money with me for 5 years. But now you are taking out money only in 1 year, which means I would have paid you only 6%. So I paid you an additional 0.5% interest income for the last 1 year. So you need to give me back that 0.5% that you earned in the last 1 year on this 10 lakhs amount. So how much is this 0.5% on 10 lakhs? That is 5,000. So that is the second amount that I need to pay to the bank. So the total fine that I need to pay to the bank is 10,000 and additional 5,000. So total 15,000 rupees is the fine that I need to pay to the bank. Now, if I pay that 15,000 rupees and get back my 10 lakh rupees, what can I get? For the remaining 4 or 5 years, which I am going to do for fixed deposit, every single year I am earning an additional 12,500 rupees, which is a lot of money. And this is a specific scenario with respect to how my dad's investments are working. You need to go back and check how much is the penalty that you are paying, that is typically 1%, and how much fine you would pay with respect to the differential amount of the interest money. In my case, it is 5,000, and in your case, if it is 10,000, 20,000, understand, is your benefit still positive if you break the deposit and invest in a new deposit? Go check it out. This is not free money, right? This is your money and somebody else is offering better interest rate. Why not? End of the day, you are being asked to pay more EMI because of the increase in repo rates. So why not go get that additional fixed deposit income as well? Now let's move into the second topic and understand what is happening with your home loan. Let's assume we are paying 40,000 rupees as EMI on our home loan every single month. Now the repo rate increased from 6.25% to 6.5%, which means a 0.25% increase. Now a 0.25% increase, and the original amount was 6.25. So you can see the increase was roughly 4%. So if your repo rate is increasing by 4%, let's go back and understand. If the repo rate is increasing, then obviously the interest on the loan would also increase from HDFC, because HDFC wants to maintain this 4 rupees of income, right? So subsequently, your EMI would also increase by another 4%, which is 2,400 rupees. So your total EMI would become 42,400 rupees per month. You can see your EMI has increased by 2,400 rupees. Now, if you are not availing that benefit on fixed deposit, on one end you are losing 1,500 rupees per month, and on the other end you are paying 2,000 rupees more per month. So it's a net loss situation. Hope that helps. And before we continue, please do make sure that, hey, you go ahead and compute your own net benefit. how much you would gain after paying penalties and after paying the differential amount on that interest income. If you are not very clear, go check with the bank on how much is that differential interest that you have to pay additionally. But do check that, because end of the day you are making more money. If it is 5,000, 10,000, 15, 20, doesn't matter, it is additional income for you. I hope this video helps you. Please go ahead, press on that like button, share it with your friend who might also benefit from going and breaking that fixed deposit and reinvesting it once again. Take care guys, I'll see you again tomorrow. Bye bye.